This is what a lot of people don't talk about, is the profile, right? Sometimes people just say, oh, my credit score is 750. Yeah, but what accounts are on your credit report to make it look like that? You can have student loans that are in deferment and have a 700 credit score, right? You could have never borrowed money or never had a credit card over a $500 limit, a $1,000 limit, and still have a nice credit score. But again, that's still a light profile. They want to see. Hey, what's going on, guys? Calvin Russell here, CEO and founder of 850 Club Credit. Hope everyone's doing well today. Today, we're going to talk to you all about the credit mix explained, because a lot of people don't understand this. But either way, how different types of credit can affect your credit score. Let's get right into it. So in this video, we're going to break down, number one, what is a credit mix? Number two, what types of credit is in a credit mix? All right. Number three, how a credit mix affects your credit score. Okay. Number four, benefits of maintaining a good credit mix. And number five, tips for improving your credit mix. Let's get started. So now, first off, what is a credit mix? A credit mix refers to the variety of credit accounts that you have, such as credit cards, mortgages, auto loans, and personal loans. Okay. It accounts for about 10% of your overall credit score and shows lenders how you manage different types of credit. So, for example, for those who don't know, usually people break down credit into two different categories. You have revolving accounts and then you have installment accounts. Revolving accounts are usually going to be credit cards because what you owe is going to be essentially like revolving. It could change. Then you have installment accounts. Now, installment accounts end in the word loan. So mortgage loan, student loan, auto loan, right? Personal loan. Those are going to be installment accounts. OK, now, when you have a mix of those between credit card accounts and, of course, loan accounts, you want things that kind of be like natural. OK, you naturally may have a couple of credit cards. You naturally may get an auto loan, mortgage loan, things of that sort. OK, but you also have to understand that when accounts close, that essentially is going to throw off that number. OK, and we'll talk about how many you should have. A diverse credit mix indicates responsible credit behavior, and which, of course, is going to positively affect your credit score. Long story short, banks like to see that you can handle multiple credit cards. That doesn't mean that you need to get 10, but 2 or 3 is perfectly fine. OK, same thing with loans. Now, we're not telling you to go out specifically to go borrow money if you don't have to go do that. OK, that's not what we're saying. But what we are saying is if you say to yourself, OK, I'm more than likely going to have an auto loan, right? Then that's perfectly fine. That's a natural course of doing something. But they want to see the fact that you do have that mix of doing so. And if you're like, you know what, I don't want to have any auto loans or mortgage loans or anything like that at all, then you're going to have to supplement that with having a certain amount of credit cards. Now, again, you don't need 10 to do this, but if you have like a goal to get to 850 one day, you're most definitely going to need at least 5 to 8 accounts with an average of 8 to 11 years. OK, and some of those accounts can easily be loans. But again, we want natural loans, mortgage loans, auto loans, things of that sort. Not a whole lot of personal loans just to try to have a nice credit mix. Don't do that. All right. Real quick, did you know that you can add your monthly subscription services like Netflix or Disney Plus, or even your cell phone bill to your credit report to improve your credit score? All you got to do is just scan this QR code or click the link in the description below to learn more. Now back to the video. Now, types of credit in a credit mix. As we just mentioned, revolving credit, which is going to include credit cards and lines of credit with balances that vary month to month. Next would be installment credit. Now, this is going to include fixed loans, like I just mentioned, anything that ends in the word loan, OK, with a set payment schedule. All right. And then, of course, you have open credit accounts that plays a role as well, too. This involves like a full payment of the balance each month, like a charge card or utility account. Or even if you have your like, for example, your subscription services reported to your credit report, that most definitely is going to play a role in improving your score. And because you have that mix of just on-time payments being mixed in. So this is a great supplement if you don't want to have a lot of credit cards, but it's not a lot of these accounts that you can get that would make sense. So that's where credit cards are going to come into play, because even if you just have the credit cards open, you have them on auto pay. You just have you have this credit card for your cell phone bill. You have this credit card for this utility bill, right? And the bills you already have, the average person has at least 5 to 10 bills. Just have those credit cards for a few of those bills, put them on auto pay. This way you're not looking for things to purchase just to use a credit card. Next is going to be how credit mix affects your credit score overall. Number one, a varied credit mix demonstrates your ability to handle different credit responsibilities effectively. Okay. Lenders view borrowers with both revolving and installment credit positively, seeing them as a lower risk. Why? One, you've been approved by multiple people. Number two is that you're paying your bills on time. Number three is that you're actively just using your credit. You have a relationship with this bank, you have a product with this bank, you have a revolving account with this bank, so on and so forth. Okay. Now, maintaining multiple types of credit accounts is going to responsibly contribute to a stronger credit profile. This is what a lot of people don't talk about, is the profile, right? Sometimes people just say, oh, my credit score is 750. Yeah, but what accounts are on your credit report to make it look like that? You can have student loans that are in deferment and have a 700 credit score, right? You could have never borrowed money or never had a credit card over a $500 limit, $1,000 limit, and still have a nice credit score. But again, that's still a light profile. They want to see 2 to 3 credit cards. They want to see that you've had some previous loans in the past. They want to see that you're paying these bills on time, that you have a good credit mix. That way, if, for example, you just got a brand new job, you haven't been on your job that long, or you may not have a certain amount of money, savings in your bank account, something like that, you have to have a supplement, right? And so as you have more money saved, as you have a lot of relationships built on your credit report, these are going to be great supplemental factors and that they're going to look at outside of your credit score, because those things could easily get you denied or be the factors that get you approved as well. Next is going to be the benefits of maintaining a good credit mix, because now you got all these accounts. How are you able to manage all of them? Well, there's apps and things of that sort, but at minimum, you want to have them on auto pay. And let's talk about a few things as well. A healthy credit mix improves your credit worthiness, making it easier to obtain loans or credit cards. It can also help lower your interest rate and increase your chances of approval for premium financial products. Now, responsible management of different types of credit shows financial stability to lenders, which we just mentioned as well, too. And when they see that you have that mix, you may, again, qualify for a much better interest rate than the market rate, because they want to have your business. They want to keep your business as well. OK, and so, again, but don't force it. Let the natural kind of course of life kind of keep it. I always tell people the easiest way to do this, just have, again, a handful of credit cards, find bills that you already have, put it on auto pay. That's good enough. If you close a credit card, what's going to end up happening is that now you don't have that account anymore. So you may lose that. So this is another reason why you want to use your credit cards, because if you don't use them, usually most credit card companies would like to see that you use them at least once or twice a month. If you don't, they may end up closing that account. So keep that in mind as well. Real quick, if you're looking for a cheap account that's going to help you build your credit score every single month, then check out this account. It's only $10 a month and it reports to all 3 credit bureaus. Scan this QR code to learn more or click the link in the description below. Now back to the video. Now here's some tips for improving your current credit mix. Okay. So number one, you want to gradually add different types of credit accounts over time, ensuring that you can manage payments responsibly. This is where auto pay is going to come in at. As soon as you have that bill, again, put it on auto pay. Next is going to be avoid taking on unnecessary debt just to improve your credit mix, as that can hurt your finances. I've seen people do this. They say, oh, well, let me get this personal loan so I can show banks that I can borrow a certain amount back and pay it on time. Banks don't just look at that. On the business side, they may look at that, but on the personal side, they're not concerned about that. They're more so concerned about, okay, you have 3 accounts, 5 accounts, 10 accounts. How are you managing these? Okay. Next is regularly monitor your credit report to track your account types and ensure accurate reporting. This is just making sure that as you're paying your bills on time, that things are actually showing up and that you don't have any errors that may throw something off. So keep that in mind as well. Now, let me know your thoughts about, again, what your thoughts are about credit mix. OK, let me know if you're not sure if you got a good credit mix or not inside the comment section below. We try to get to all the comments, but sometimes we can't. We get about 150 to 200 comments a day, but we try our best to go ahead and just kind of keep an eye on them throughout the time frame. But let me know your thoughts in general about a credit mix. And, if you think you have a good one, if you think you have a bad one, if you should be adding accounts, subtracting accounts. Again, things don't have to be perfect, but you at least want to make sure that you have the education and the knowledge when it comes down to saying, okay, I have this type of credit mix. Thanks for watching, and we'll see you guys on the next video.